equities philosophy is like the bedrock of how you go about investing, right? Because that's what guides what you invest in, how you invest in it, for how long you're invested in. And that philosophy, the basis of it is determined by your investment goals, the reason that you're investing in the first place. And that really determines the entire process from actually making an investment or reviewing an investment, because we all look at one specific investment very differently because we all have very different goals. That's why in a transaction there's always a buyer and a seller, because there's a different basis and that is informed by your philosophy. At Kgori Capital, the way we look at investments is not necessarily with a style basis, whether it's growth or value, etc. But we take a more holistic view and we look at quality and consistency in performance in terms of the track record of whatever investment we put our money in. We look at through the cycle performance. So there's always a business cycle, but we look at the fundamentals. What drives that business? And are those indicators solid, right? Is the management solid? Because no matter what the business cycle is, a solid management team who know what they're doing will be able to navigate through whatever storm that they go through. We have a long-term view in terms of how we invest for our clients, and we want to make sure that in 10 years' time, this business is still there and it's still thriving. But on top of that, it is actually delivering returns that make sense for our clients. Risk is that the outcome is different from what the expectation was. That is essentially what risk is. So when we look at an investment and we value it, there has to be a margin of error to say, okay, this is our expectation, but we are aware that things might not land where we think they will land, right? So you have to have that margin of error in equity investing to say, okay, what is my buffer? Because there can be a once-off event like COVID and a conflict or a war somewhere that really upends everything. So it's about having that buffer, that margin of error. And that's what we build into our forecasting and our portfolio construction to make sure that even if things don't work out the way we expect them to, we still have that margin of error that can buffer whatever the effect of that will be. When investing in equities, volatility is something that's built in, right? And volatility, what that is when prices move up and down really quickly. And it's usually in response to some sort of shock. When things don't go as expected, there's volatility, because now everybody's trying to scramble to figure out what does this change mean that we haven't priced in already. So during periods of volatility, we assess those fundamentals to say, has anything changed? If it hasn't, we stay course. And because we, like I said, we look through the cycle, through periods of volatility, through periods of the business cycle. When you look at investment, quality is also about sustainability. If the governance of a business is not strong, then there's no continuity because there are shocks that might happen. The security of an investment is really dependent on ESG concerns and how you tackle them. So from the foundation of Kgori Capital, we've always been signatories of the United Nations Principles of Responsible Investing. And these principles, the bedrock of them is ESG, right? Your environment, social concerns, and governance. And how that is built into the process, not just as it being a separate step to say, okay, does it tick all the ESG boxes? No, but it being part of the fundamental process of valuing a business, right? And that from the foundation of Kgori Capital, that has been a concern, and that has always been built into how we look at a company and how we assess the quality of a business.